Good morning, traders. Paul here with GammaEdge. Today is Monday, the 21st of November, Thanksgiving week. Let's get started. Pause your players here, please. Read to the bottom. If you agree, hit that play button. Summary for today, our market models are largely in cash or short. We're in this transitory phase. We are in the earliest stage of improvement for the short-term timer. It does not rely on any history. It's just looking at what happened on Friday, and we closed slightly higher than where we opened with the cumulative tick, and that is something to pay attention to. But as most of you are aware, it's been quite choppy, lack of trend, and of course, the market model, which is a trend-following model, is going to follow that. Intermediate term is off or cash, and possibly a little short. And then the long term is completing the full reversal to turning off in cash. Now, all of this is subject to a reversal, but just be aware. Other tick models that we follow, the Russell, the NAS, and the SPX, are all bearish and are confirming that side of the equation. On the plus side, GEX has moved up to 4,100 from 4,000. We saw a huge 0 DTE or 1 DTE line grow at 4,000 late last week as people were looking opportunistically for the SPX to move up. It did not. So they effectively had to close those and monetize those out, most likely for a loss. We do think this move upward to 41 is constructive for the bulls. Downside line 3,600 is solid, so as we push north, you might want to pick up some insurance to the south. Interesting to note, we closed at plus trans, which is the level with that strike where it and all of the strikes above are dominated by call gamma. We closed right at that level on Friday in the SPX PM settled, the 0 DTE for today, and the SPX combo. When you get the transition zones all overlapping like this, it's very strong, something to pay attention to. So this 39.65 line as plus trans is something to watch. We do not expect to close below 38.90. We could test it. We see a lot of support at 3,900. And then 39.25 with some ranges in there. Take a look at the charts, but we do see volatility through Wednesday into the Thanksgiving break. We note that Friday's expiry in the SPX is relatively weak, but the Qs in the SPY have quite a bit that are coming off. We see a lot of the SPX coming off in Wednesday. These are in the money calls, whereas the Qs and the SPY are doing this on Friday. Bottom line, we think the market model is weak to either direction. It doesn't really matter. We think there are significant in-the-money calls that expire this week, which dominate the landscape. We do see some adjustments even with today. Nothing is overly supportive of a major run-up from here, nor a break down below that 38.90 level. We're basically saying we don't have a trend. We're horizontal. We have the overlap of the transition zones in the shortened trading week. It suggests that we're going to stay locked into this 38.90 to 40.40 play zone for the week and play it accordingly. And we'll see where we go from there. Taking a look at the cumulative tick model, the summary's right here. You can see it. Just watch for choppiness and reversals. We could see more of this sideways action. We did get 1 day down, 2 day down, 3 day down, and now we're kind of at this transition. Just wait. We could move upward from here, reclaiming this. The distance is very, very small, so we could see some strength upward, or we could see another break down below the short-term white moving averages. Either way, not very constructive, almost a flat what we call ribbon, which is our historical where have we been line, and since we're so close to it but it's relatively flat, tells you all you really need to know. Key levels for today, that 4,100 again is the move up from 4,000. 36 remains the line in the sand. Expected move open, high, low, close, very conservative. 2.37 probably will be less. The PM settled, note at above 4,000, very, very call dominated on the deltas. A few pockets down below to pay attention to. This 3835 is already rearing its head. This is the JPM hedge. 4,000 or 44,500 contracts to the short side. Just be aware of that and the possible impact that we have there. Few hiding areas. If we do get put opening to the downside, we'll start seeing this convert over to the red, and that will give us a magnet towards the downside. Note, it's going to be pretty difficult in the short term to push higher than this 4,000, but if we can take 4,000, it's smooth sailing to the north, and clearly we could see the dealers selling the rips and buying the dips, and that'll dampen out some volatility there. Taking a look at the 0 DTE, same coincident area here with the transition. You can see a little bit more back and forth nature, not as clean. The 0 DTE contribution above 40.40 today is just simply not there. 3,900 to the downside. You can still see there's quite a bit of put dominated gamma down below that 3,900, but look at the deltas. The deltas below that 38.90 zone, 38.95 zone are noteworthy, and it's going to be very, very difficult to move rapidly and hold down in this area, at least from a contribution from the 0 DTE. So we're thinking that play area is 38.90 and above, all the way up to, as I showed you before, that 440 zone here. Taking a look at the 1 DTE, same transition range, a little bit more expanded. We are looking for this, 39.55, 39.60, 65 as a possible pinning zone. You could also see one 39.40 to 50. That would be a nice ending zone for the day. It's also got the same structure where we go back and forth and have the zeros. And you can also see the same thing even down here to the 39.30, 39.40, and 40, 39.35 and 40 level. To the upside, we would not be at all surprised if we held the 39.70, 75 level. Again, a nice little area, very structured in terms of moving into a call-dominated gamma with some transition. If we get any calls that open up over the course of the week in anticipation of a move north, that could turn this into a nice green zone, and that would be constructive for the bulls. Taking a look at the overall combo, again, here's that same transition, plus trans sitting right here where we closed at. We rarely see all of the transition zones overlap like this. 39.55 and below for the overall structure, very constructive to the downside. Call dominated deltas. You can see that down below 39.25 is where we start picking up the negative gammas. I have only highlighted this 38.35 zone as being the JPM December 30. This is already starting to rear their ugly head, so just be aware of that it's out there and looming. To the north, you can see some transitions all the way up to that 40-30 zone, and then we start getting pretty good all the way to the north here. Look at the 4100, that's that upside target. We want to pay attention to that. And then, of course, here is call open interest and put open interest dominant, not very liquid, but certainly in play. I do want to highlight this number here is not overly bullish. It's not bearish. Call dominated, but not in the hundreds of thousands. And when we see the combo structure not overly strong, we could move down. We could see some weakness. So we need to see this improve over the course of the week, and we'll just see what happens here. Taking a look at the delta moneyness, we are projected to drift higher. Just be aware of that. This is for the SPY, and I urge everyone, I know there's a lot to read here. We've had some comments that there's too much to read. You need to read this, period. This has got a lot of great information in there about charm and the role of the dealer in context of when we see the moneyness levels. And then if we start trading options, what does the dealer have to do? I urge everyone, read this, bring your questions into the Discord. We're happy to answer them. But if you don't read this, it clearly is going to put you at a disadvantage to use this tool. Finally, taking a look here at the SPX structure, 4100 upside, 3600, those are the goalposts. You can see the JPM Novembers, the 4145s are already starting to rear their head there. This will come off next week on November 30th. We're sitting right here at the base of transition. You can see the bottom of transition right around that 3930 area, 3960s sitting right here. So a couple key lines there, but we are poised to move north should the market start seeing that type of constructive behavior. So with that, I bid you farewell. If you have any questions, comments, we urge you to come into GammaEdge.us, fill out the blanks there on the pricing tab. That'll get you into the Discord. 14-day free trial, all the tools turned on. Urge everyone to do that. Come kick the tires and meet the team. A lot of great traders, a lot of great investors. Follow us on Twitter, GammaEdges with an S, and then on YouTube. If you like today's content, give me some immediate feedback by smashing that like button, and of course, subscribe. When you subscribe, you'll get notified when Taylor and I post. We try to post between us 2 videos a day, giving you kind of the pre-market open as well as the end-of-day summary and positioning for tomorrow. So with that, have a great week, shortened week, and hope to see you in the Discord. Thanks, everyone.